Dolaponi, who is the head of energy research at EcoBank here in Lagos. Good morning. Thanks for coming through.
Thank you for having me.
How was the trip to Nairobi? I always say this, Karibu Sana.
Asante Sana.
Asante. Thank you for coming. That's what it means. Okay, now let's look at this. It looks like we're in a serious problem from the crude oil market and from the petrol market. Let's talk about the big story, which is the crude oil market. Yeah. When these four oil majors shut in, force majeure, that's what it's called in technical language, yeah, we are in some form of problem.
Yeah, we are. Major issues. Because again, we've created significant uncertainty in the Niger Delta. Don't forget, as a background to this, coming into this, we're already talking about the fact that because of the lack of uncertainty around PIB, around oil prices, most of these guys had cut production, they had even reduced investment. We also just released a note last month talking about the fact that there was no more real drilling activities going on in the Niger Delta because nobody was actually exploring or even appraising any discoveries that made in the past. As at February or March, there were only about 8 drilling rigs actively drilling in Nigeria. Yeah, in Nigerian waters, both onshore and offshore. So that was the background to this. And then this now started happening from February. And we had Forcados went off stream 250,000 barrels per day. We had Brass River 180,000 barrels per day. Then we lost Kwaibo, we lost Bonny also too as well. And then we had Okan also another 90,000 barrels per day. So but the good thing is that, well, Brass River came on stream yesterday, so Brass River is back. But that's still a lot of, and the impact is going to be on revenue. Now, that's where you start to see some impact. Because in the next 45 days now, days of credit, shipping and all that time, by the next FAC meeting, we realize that, look, that impact will hit because we don't know what crude oil price will be in 45 days. Our outlook is that it's likely going to still be in the range of $40, $45 per barrel. At those prices and with that lower crude oil production, imagine the revenue impact, the FX impact for Nigeria.
So what we're talking about as of today, the 16th of May, give it 30 days, 45 days down the line, towards the end of June, we'll see the impact on our balance sheet. Exactly.
And of course, that also will affect, I mean, don't forget, this is where it gets really interesting. We use the dollars, we used a lot of the dollars to import petrol for the local market. The import bill on a monthly basis, somewhere around $500 million. But the question is the government actually going to keep on earning that? Because at the current, I think we're earning roughly about $1 billion a month. And that is when we're producing 2 million barrels per day. With 500 barrels gone, that would affect how much we actually generate.
500,000 gone.
Exactly.
So we're down to about 1.5 million.
Yeah.
Interesting. Let's continue. Let's tie this together with the new petrol regime, therefore, because we're earning here and we're pumping it out here. Exactly. So we're just going through a feed-through, and
the surplus is getting tighter now. Exactly. Because the amount of FX that will be available for other things now is also reducing. That's what this means. For me, the fuel price discussion starts from the FX angle, first of all. I think it's a good move in the sense that they recognize that, look, the FX is not available at 200. There is no sufficient available amount of FX
at 197,
at 197 or 199, you know. But what they've done in recognizing 285 is that they've not fully recognized the full devaluation or the full value of the FX in the local market, which is more available to everybody who wants to import. Because what you've done, you've also said that, look, anybody can import any amount of fuel they want. That's part of the new move, okay? The import restrictions were lifted. But not everybody can access FX at 285. So this works, for instance, like the larger majors like Total, Mobil, Forte Oil, Conor. This will work for them because, again, these guys control about 65 to 70% of the retail sales market. Yes. Okay. Now, it's good for them in the sense that these guys, before, they'd been restricted to just about 25% of imports. Because they didn't have as much storage, and people had to calculate subsidies on a quarterly basis, so they had to use whatever storage was available. Independents control the larger share of storage.
So this is shifting.
So this is shifting market share essentially from
the independent marketers to the oil majors.
Yes.
Who has the size? Who's got the investments? Who's got the pipeline? That they've invested billions over the years to control the market.
Yes. And don't forget, because there's also some of them also have upstream activities as well. So that would be a route for them to also get FX, perhaps. You know, to some extent. But to some extent, there still needs to be a third leg to this angle, to this discussion, an effective interbank market where people can actually bring and sell dollars into. That's where the bulk
is that the market that some of you commentators were saying that next week, Tuesday, the central bank should bring this pool create this pool and let dollar flow into
Yes.
that and let these majors and independents as well source
Access
from
that.
it.
Exactly. That's what we're saying. That's the only way this can work, because this would only work temporarily and to the extent that some parties are actually able to access dollars at 285. What it could do on the reverse side or on the negative side is that it could put more pressure on the $200 200 naira per dollar market, because again now
At the official window.
Yeah, because you've created a second window for arbitrage. Before, the only arbitrage that existed was between the official 200 and the parallel market of 320. But now there's an arbitrage not just on the dollar side, but also an arbitrage to fuel. So even if I'm not into fuel importing, if I can get dollars at 200, I'd be tempted to also pick fuel as well, and also see if I can sell into the market at 145 and make that arbitrage difference.
Interesting. So that's the window that the central bank, now it looks like everybody's pushing this ball now into the table on the corner of the central bank to say you've got to fix this within the next few days.
Yeah, it's a pressure, because as we approach the oil upstream issue as well, in terms of the revenue downfall that we could see because of the lower production that we're currently producing, there needs to be an effective market now so that we can even encourage more dollars to come in from outside the economy. Dollars looking for investments in Nigeria, coming to invest in bonds, in the stock market and the likes, would also sell into that market, because that's a more reflective market.
Do you see this new guided petrol deregulation as an opportunity for the major oil traders globally? Vitol, Mercuria, the big boys, to come in because the volume is where Nigeria really is.
Yeah, that's the truth. The fact is that the oil traders would also benefit from this move, because now you're saying anybody can import, everybody can import whatever volumes they need to import. Previously, it was restricted to, it was
via allocations.
Allocation,
like
exactly. And even those allocations, not everybody could meet it. But now there'll be huge demand. In fact, when the announcement was made, I was having a chat with a friend who is a trader, and there was a lot of rerouting going on the high sea that night, because people were saying, look, this cargo needs to move to Nigeria now.
Oh, really? Because Nigeria is where the money is going to come from.
Yes, because that's where the money is. And as we speak today, right now, there's roughly about 75 ships waiting offshore to offload, because there's no dollars at the moment to clear them, but they're there. They're waiting to offload. So
because if you offload now into Nigeria, you're looking at 145 naira per liter.
And you are looking at cargo that was priced at 86 initially.
Oh, really? Something's going on I'm not aware of?
So
you mean on the high seas, folks are just turning around and say, look, head to Nigeria, because from between 86 and 145, there's money to be made.
There's an arbitrage to be made. I mean, if you're sitting on old stock that you lifted from the ports at 77, which was the ex-refinery price before, you're able to sell at 145 now. That's a huge margin. And that's an opportunity that I think even the majors are taking advantage of right now, because if you drive around the streets of Lagos, I had to drive, from VI all the way here, and you see that practically all the major filling stations are selling fuel, 145.
No queues.
Well,
yeah.
Very minimal queues.
Exactly,
very minimal queues.
So this is likely going to clear the queues a little bit for us.
Yes, this should clear the queue for a short period of time.
A short period of time?
Yes. I think in another 2-3 months, as the FX issue starts to come back up again, we're going to have to sit down and look at this issue again. In
other words, I keep asking the question, this is not a silver bullet.
No, this is not deregulation. This is price revision. And the government has said that clearly several times, that look, it's not even subsidy removal as well. Why? Because there's a possibility that if we get to if FX starts to sell at somewhere around 360, 370, and that has to be recognized in this price, then price would also have to increase. Otherwise, there will be a subsidy element again. If all prices also recover to somewhere in the region of about $55 to $60 per barrel, subsidy will also creep in again.
Yes. As soon as the crude prices move, you have to do something.
You have to do something again. So I think from around $55 per barrel, you'd have to see another subsidy element again, which would then be when you say, look, if there's no subsidy, then price will have to go up again. But if there's subsidy, then you'd have to pay something.
Finally, do you think we should do food regulation? If yes, when?
Well, I'm trying to remember a proverb someone told me over the weekend about something about the best time to do something is now.
Yeah.
If you didn't do 20 years ago, the second best time is now.
Yes.
And I think the regulation is a bullet we have to bite at some point. What they're afraid of is the fact that in most other parts of Nigeria, outside the major cities of Lagos, Abuja, and Port Harcourt, where regulation is tight, everybody else will be probably selling at 250, 300, some ridiculous prices. But what I think is that it might be a pain we have to bite, because if you look at the rest of Africa, I did a quick calculation, all of our neighbors in Africa, if you price it even at $199 per barrel, they are currently buying 181.
In Angola?
Angola is even doing like 277 or so.
277 naira
Yes.
to a liter.
To a liter. So if you take the average around us, I'm talking about Chad, Cameroon, Chad, Niger, Burkina Faso, and Benin, average of 181 naira per liter as well. So it will totally reduce diversion, because if I can lift from NNPC and take it to somewhere else, people will still try and do it. But what I think will restrict it is the fact that, okay, if you want to lift now, you can import it yourself and take it to
Benin Republic
if you wish to. It's your business, you know. There's no subsidy to be paid to you, so it's entirely your own
risk.
So that may be what may fight diversion for now, you know. But I think in terms of pricing, we'll still see a bit of movement of cargoes out of Nigeria. If it's easier to bring it in through Nigeria, then I'll bring it to Nigeria and move it to whichever country I want to move it to.
Still a lot of work to be done there.
So at some point we still have to bite that deregulation bullet.
Okay. Well, let's keep the bullet somewhere on the shelf. We'll keep looking at it. Thank you very much for coming forward on the conversation.
Thanks for having me.
Dolakwo, the head of energy research at EcoBank Group. Let's come back after the break to talk about the budget. What's the budget to deliver? We'll tie the budget into the new realities of Nigeria's oil industry. Okoyemi Agbaje, economist and policy analyst, is live here in 2 minutes.